David, you do the difficult part. What did this wise man call compound interest? The eighth wonder of the world?
Well, certainly. I think it's quite interesting. When you talk about savings and you talk about investing, really there are two sides to the equation. The one is the art of investing, and the other one is the kind of the science or the maths of investing. And really, despite all the maths that we do, I guess the question is also really when we talk about the eighth wonder of the world, why are people not investing more?
Exactly.
I think that's on the one hand when you talk about investing money. On the other hand, when you talk about borrowing money, obviously compound interest has the negative effect on the downside. And really, I guess the trick is through your life cycle is really to optimize on the upside in terms of the investment and really minimize the downside risk on, in terms of when you're borrowing money.
Sure. Talk to the millennials, David, if you can, because it's difficult to try to reach them because they know so much. But and make them understand why perhaps investing and looking at compounding your interest is the best way to go.
So, and I think, if you look at, for example, our savings rates over the last, couple of decades, it's actually really reduced
in South Africa.
In South Africa significantly, and certainly in terms of our indebtedness as a country, we actually, we are pretty much over indebted.
Right.
And I guess you've then got to ask the question in a high interest rate environment relatively to the rest of the world, what does that really mean for individuals on the ground, whether they're millennials or whether they're in any generation?
Sure.
And talk to the point of millennials, I guess things like social media and the media in general, I really think has got a role to play in trying to educate individuals as to not only saving, but just to start saving. And actually, the earlier you start, the better. And again, talking to the behavior of saving, it's really around understanding what are your triggers, what drives you. And as much as we can understand the maths, it's really understanding you as an individual, what are those pain points that potentially you might have to save for in the future.
Sure.
But also for today is to make sure that you actually get the benefit of your savings through the process. Don't wait, when you start talking about retirement, millennials switch off.
But that's part of the problem, isn't it, for the millennials? Because, you're saying to them, you are going to live longer, but you're saying to them as well, start early.
Well, start, and I think that journey is a long one, and there's a lot of things to enjoy between now and your retirement. And really, I think it's about Savings Month is in July, and we're having the conversations, and I think through the exposure, I think we've all got a role to play. It's not only about the financial services industry. It's also about the government in terms of the regulation and the ability to incentivize people to save.
Is there enough, do you think? Could government do more a little bit to incentivize people to save?
Yeah, I think so. I think if you talk about saving, saving's not all about consumers. It's also about businesses out there.
Sure.
People that businesses that actually need to grow, need to do fixed capital expenditure and the like. Borrowing is not always the right option. And I think when you look at it on a national basis, in terms of South Africa as an economy, developed economies are really brought off or have been built off a strong savings culture.
Sure.
So this is for all of us, and I think we've got a role to play, not in terms of making sure that individuals do well, but I think the economy as a whole does well.
Absolutely. Easier said than done when you say you need to start as early as you can and we need to develop this culture. The other tough thing to do is once you put it aside, you see it grow, to leave it alone.
Well, exactly, and I think that also talks to the the law of compounding. Interest on interest is one thing, but certainly even interest on your initial capital is good. It's better than not putting it into an investment account at all. But if at all possible, leave it and let it see it, or let it grow.
While we're saying the government ought to do more to incentivize people, can we also incentivize you guys as the banks to perhaps reduce the cost so we can save a little more?
Well, I think the reality is we play both sides of the equation. And our livelihood as banks, in fact, is around deposit taking. And if we don't take in deposits, it's very difficult to lend the money out. And I guess what the reality of it is to make the things a lot simpler for consumers, a lot more transparent, and certainly I think allow consumers to get access to bank deposits and education a lot easier than they have in the past. And I think that's our role.
And what's your focus, you guys, on during the July month?
So we've had over the last couple of years, we've been involved in July Savings Month, and I think this year our sort of pledges that we're asking people to do is somewhat different. But it's really to say, just start giving or give up one thing and start saving for something. And then I think the second part of it was, well, start saving for something that actually matters to you. So at least you are able to see some benefit, hopefully in the short term.
Absolutely. Begin small. David, if you look behind you, you'll see the color behind you. Can you look behind you? Haha, you see, we are supporting Nedbank in the Savings Month. Thanks for coming in. That's David McCall, is Executive Investments, Retail and Business Banking at Nedbank.